First up in this second part of the session is Barden Davies. Barden's Managing Director of Peak Rare Earths Limited. Barden holds over 20 years of investment banking and corporate experience in the mining and energy sectors. He was formerly CFO of UPC AC Renewables Australia and previously held a number of senior investment banking roles in Hong Kong and Sydney. Previous roles include Head of Resources and Energy Group, Asia Pacific, Deputy Head of Corporates, Asia Pacific, and Head of Advisory, Asia for HSBC, and Head of Metals and Mining Asia for Macquarie Capital. Barden has significant emerging markets experience and has worked on a broad range of international advisory, capital markets and financing transactions. Welcome, Barden.
Thank you. Thank you, Deborah. Honourable Minister, Ambassador, ladies and gentlemen, absolute pleasure to be here this morning. Let me figure this out. Draw your attention to our disclaimer. So, Peak is a rare earth development company, and so very much aligned to thematics around decarbonisation, the rise of electric vehicles and renewable energy. As we announced to the market on Wednesday, we're undertaking a bit of a strategic shift. We're moving from an integrated upfront mine and refinery model to a staged and sequenced integration approach. So the initial focus is going to be on the development of the Nagwala Rare Earth Project in Tanzania. Nagwala is one of the largest, highest grade, undeveloped NdPr projects in the world. Our initial focus will be to develop it as a standalone project, produce a high-grade rare earth concentrate, which will initially be shipped to third-party refiners. Now, as part of a longer-term integration strategy, we're going to undertake an independent assessment as to the technical, economic and environmental feasibility of undertaking further downstream processing and refining opportunities in Tanzania. So depending on the outcome of that study, we'll either move forward with downstream operations and a refinery in country, or alternatively revert back to our former strategy, which is to develop a refinery in Teesside at our site in the northeast of the UK. The reasons for that shift, that movement from an integrated Nagwala Teesside project to a staged or sequenced approach, is that it provides us with a lot more optionality around downstream opportunities in Tanzania, particularly after we do that work. It's going to materially reduce our upfront capital expenditure and funding costs. It's going to materially lower commissioning and technical risks previously that would have been entailed in terms of concurrently bringing on two larger projects on two different continents at the same point in time. But also importantly, what it enables us to do is it enables us to capitalise on this growing appetite that we're seeing for our high-grade Nagwala concentrate. So, neodymium and praseodymium, or NdPr, will account for more than 90% of the value of our concentrate going forward. So, with end users in electric vehicles and direct drive wind turbines, the demand outlook is very much being supported by global decarbonisation initiatives. So, these initiatives now include more than 30 countries committing to a complete phase-out of new internal combustion engines by 2035, and rising government funding and initiative across the world being directed towards electric vehicles and renewable energy. So from an EV perspective, of course, it's not just what the governments are doing, it's also what the global auto brands are doing. And so what those global auto brands are doing is committing to the electrification of transport. So by 2030, we'll have the likes of Jaguar, Volvo, Fiat, BMW and Mercedes all committing to a phase out of internal combustion engines by 2030. And we now have General Motors committing to a complete phase out by 2035. So We are very much in that last phase of petrol and diesel vehicles, and the world is very much moving towards the electrification of transport. So continuing the theme around decarbonisation and the green transformation, as we've heard in earlier sessions, Tanzania is blessed with major endowments, not only of rare earth, but graphite, copper and nickel. So is incredibly well positioned to capitalise on the green metals opportunity to generate national wealth, to create jobs, as well as to transform its economy. So obviously Tanzania is an established mining sector and jurisdiction, fourth largest gold player in the continent. Under the new president, Her Excellency President Samia Suluhu Hassan, we're seeing much more government focus on the sector. A lot of support for progressing with new projects. We've seen a large number of special mining licenses and framework agreements approved by the government. We're also seeing much more active engagement with foreign investors, and we've got some very aggressive growth plans by the government, which is seeking to grow the size of the mining sector in Tanzania by 4 times between 2020 and 2025. We have a long association with Tanzania, which goes back to 2008. To date, we've spent in excess of US $45 million on a combination of exploration, technical studies, and community initiatives. Last year, we established a head office in Dodoma, the capital of Tanzania, and we've also assembled a very experienced senior Tanzanian team. So that includes the Honourable Abdullah Mwinyi. He sits on the Peak board, provides a very important Tanzanian perspective and insight into all of our decision making. We've also got our country manager, Ismail Dewani, here as well. He's been with the group 7 years. So turning to our Nkwala Rare Earth project, very much world class, plus 20-year life of mine supported by JORC compliant ore reserves. But importantly, those ore reserves account for less than 20% of the resource base. So significant scope for future mine expansions as well as extensions, and the real potential of this project being multi-generational. From a mining perspective, strip ratio below 1.8 times, minimal requirement for blasting, predominantly free dig. So we're going to be targeting annual production of about 40,000 tonnes per annum of a 45% grade product. And you can see on the right-hand side, clearly differentiated from our development peers. So top slide, you can see much higher grade than our peers, and that's both from an REO or a rare earth oxide as well as an NdPr perspective. And on the bottom chart, you can see that we are blessed with very low levels of radionuclides, so really low levels of uranium and thorium. That's relevant because we're not going to encounter the same environmental constraints and challenges of some of our peer projects. And it also means, in terms of moving a final product, that we don't have to deal with the elevated levels of uranium and thorium in those products. Sort of a high-level flow sheet of Nkwala, but the key point here is that we will be undertaking a significant amount of beneficiation, processing, value add in country. We'll be taking ore with a head grade of about 4.8% life of mine, upgrading that just under 10 times to a 45% concentrate through a 2-stage flotation process. So whilst the initial focus is very much on the weathered bastnasite, which forms the basis of our ore reserves, longer term, there are significant growth opportunities. So first of those is we see the potential to produce a separate monazite concentrate. So in addition to the bastnasite concentrate, there's a very interesting zone of monazite within the deposit that we think would lend itself to the production of a separate concentrate. We've encountered very interesting interceptions of heavy rare earths in the northeast of the deposit, so that's a key exploration focus going forward. whilst we're looking into refining in country, we also think there may be scope to produce an intermediate product, a mixed rare earth carbonate, so that's a key area of focus. We've also encountered some very encouraging interceptions of fluorspar, niobium and phosphate. So again, will be key areas of exploration focus as we move forward. From a Tanzanian regulatory perspective, our special mining licence application was approved by Cabinet last year and will be formally granted post the finalisation of a framework agreement. We're in final discussions with the Tanzanian government on that framework agreement and hope to sign it shortly. You can see that our special mining licence area, approximately 18 square kilometres. We do not need to relocate anyone within the community. And as part of that framework agreement, the government will be entitled to a 16% free carried interest. We like the concept of the government having a free carried interest. We believe that it creates strong alignment of interests. If our project does well, we want the government to be benefiting as well. So the Nguala project is also going to deliver substantial opportunities and benefits for the community. From a job creation perspective during construction, plus 800 direct jobs and in excess of 3,000 indirect jobs. And then during operations, 225 permanent direct jobs for Tanzanian nationals and over 1,000 indirect jobs being created over the life of the project. We'll also deliver material improvements to regional infrastructure, including upgrading roads, an improvement to the airstrip, new water supplies, etc. We've got a picture there of the road that connects Nguala to Kaninga, 45 kilometre stretch of road. We spent about US $900,000 earlier this year in terms of remediating that road. Very helpful for our project because we're able to keep our camp open all year round, but has transformed local lives. And the reason for that is that the community now has access to a road that they can use all year round through the wet season. We've seen the commencement of bus services to the community. So it used to be very challenging for individuals to travel to the district and regional centres. That's now very feasible with regular bus services. The cost of goods for the community is falling because the trucks are coming in, costs are falling. And then for farmers, their products now can sort of target more attractive markets and they're securing higher prices. So just a small example of the benefits of our project to the community, and obviously those benefits are going to multiply as we move into development, construction and operations. We've got a very good relationship with the community. We put a lot of time and effort into it. We support that community through things like the construction of classrooms and teachers' houses. We put a lot of funding into local medical clinics, and we also support a number of sporting and cultural events. We had the Deputy Minister for Minerals attend the site earlier this year, and he was addressing probably a crowd of 600 or 700 people, and he made the point that he'd never been to a project before that wasn't in production and had done so much for the community. So look, we're very fortunate of a very strong relationship, and we will continue to invest in that relationship with the community. Importantly, our project's also going to generate a very significant stream of direct revenue for the Tanzanian government. So if you adopt Artemis's latest price forecast, over the life of the project, potential to deliver the government almost $5 billion, combination of royalties, free carried interest, and corporate and indirect taxes. So looking forward, what are the next steps? Well, we've got a laser focus on getting through a final investment decision and getting our project into construction and development. Key work streams underway at the moment to support that target. On the technical side, we completed a bankable feasibility study in 2017. We're in the process of updating that. We've guided the market to completion within 6 to 8 weeks, but it's fair to say the team is working very hard to materially better that target. From a regulatory perspective, as I said, in hopefully the final discussions and negotiations with the government on a framework agreement, and the expectation is that we'll be signing that very shortly. On the commercial side, excellent progress in terms of engagement around concentrate offtake. And on the financing side, we've been working with a debt advisor now for the last 8 or 9 months. A lot of progress. We've got a debt information memorandum out. We've got a financial model, we've got a data room, and we're in active dialogue with a broad suite of financiers, everyone from development banks, commercial banks, and export credit agencies. So that concludes the presentation. Thank you all very much.